Hey guys, hope everybody's doing well today. Let me get this. Good morning, Bob. Let me share my screen. Good morning, Dan. Whoops, not file. I want to share my screen. There we go. Hope everybody's doing well. We've had, good morning, Keith. We had nothing but rain here for like 5 days in a row, and the sun is supposed to come out today. I really hope it does. I'm getting tired of the rain. You guys see my screen okay? Bob, yes. Dan, yep. Okay, good. Looks like Eucharist is going to join us here. I'm just going to minimize this so we can get into the chat stuff. So interesting day, huh? Very interesting day. Hey, I just uploaded a video this morning of another private client that I'm coaching, and really interesting because when I take on private clients, they get all of the scripts here that I'm using for the setup for this system. So what happened was they were shorting the YM-NQ, so they were selling the YM, buying the NQ on the way down here. And then they identified properly this little support area on the chart, and they started looking for signs to go long, and the bypass filter came right down to this lower band, and we had this kind of like U-turn set up on the arbitrage script, and he went long right in here. And he walked away from his computer for a while, stopped the recording. He came back, and he was up $1,290 as soon as, and it just took off. I mean, it absolutely took off when Facebook earnings came out, and it dropped about, it was about 10% just after 4 o'clock, and then it dropped 20%. I saw it down as much as 25% at one point. But that video is up now in the membership area, and I go into a lot more depth on that video. But just remember, I did it very, very late in the day. And actually, it was at night. It was like 8 or 9 o'clock at night, and I was a little bit tired, and my voice was raspy. It was horrible. But anyway, I got through the critique. You guys should check that out. It's definitely worth watching. So yeah, really interesting day. I have not seen any institutional buying coming in here yet. We've got market timer supply demand at around 5. It started off at 2.3, and it's just been climbing up to like 5.1. But I've seen absolutely no institutional buying coming in here. Hey, good morning, Eucharist. Oh, you're welcome. You're very welcome. All right, let me just. I got everybody in here. Yeah, I can see you. So no institutional buying coming in yet. We've got a +5 on the supply-demand index on the New York and a minus 1.19 on the NASDAQ. But it looks like the strength, I don't know if you can see this or not. I'll move this over. Whoops. Let me move this over here. The strength index on the NYSE, YM, and the NQ. NQ is actually starting to come back a little bit on the strength index, and you can see it's starting to rise here. But the strength index on the NYSE and the YM and the diamonds is starting to decline just a little bit. Just a little bit, not too much. I haven't taken any positions yet. I'm really looking to a, well, here we go here. We're starting to get a little bit of a decline in the spread between the YM and the NQ. That spread had widened out to about 130%. It's 106% now. And at 130%, that's typically one of the widest spreads, at least intraday, that I've ever seen. It's very, very big. A 1% spread on the YM-NQ is actually huge. So right now, the super pass band filter is starting to turn down just a little bit. It's kind of oversold. We're getting a little bit of a pullback in the YMNQ. We mentioned in Tuesday's session that the weekly chart of the diamonds and the Qs was extremely oversold, and that would probably go higher from here. It certainly is that case today so far, and yesterday at the end of the day. Yeah, Dan, there's a lot of, I mean, the earnings are just all over the place. I mean, and some of them was good news and some of it was bad news, but for the most part, it does move the market. That's for sure. I really don't pay attention to the earnings very much, only because, you know, you really have to take your emotions out of it, and you also have to take your opinion out of trading too. Your opinions are very, very dangerous in trading. And so what you want to do is you want to look at the facts. You know, is the market going up? Is it strong? Is it weak? You know, what are people putting their money into? Are they actually putting money into the market, putting it to work, like institutions, especially institutions? Or are they, or is it just, you know, getting a little bit too hypey? Yep, Amazon's tonight, so that could definitely move the market again. That's for sure. I don't think I've seen this big of a difference between the YM and the NQ in a very, very long time. Euchre's for day trading like this, you typically use 1 hour, 15, and 5. Here's how I separate and how I do the different time frames. If I'm doing the YM NQ spread, I'm only using 1 hour charts here. So I got a 1 hour chart on the NQ, 1 hour chart on all of these, the oscillator, the filter, and the arbitrage script. I'm on 1 hour all the time. I don't switch back and forth on the spread. When I'm doing the YM or NQ scalping, for example, in the other videos, I showed you the supply demand went up to 100 or something, or 200, or minus 1300. What I'll do is I'll use a 5-minute chart to do the scalping. So I'll only use 5-minute charts. Sometimes I'll go out to 15-minute, but not typically. No, I'll stick with a 5-minute on a scalping. Keith asks, Dave, should I change this value YMQ? Okay, so here's one of the other things that I do, only because I want to keep an eye on what the value of the spread is between the YM and Q on a daily basis. So what I do is at the beginning of the trading day, let me see if I can find it. Here it is here. At the beginning of the trading day, we have this little script that is the ratio, the YM NQ ratio. And so what it does is it automatically calculates the ratio between the YM and Q at the start of at any time it's trading. But I take the reading at the time of when I start trading. And so I enter in 3.3428. This morning it was 3.42899. And so what I'll do is I'll just take that ratio, I'll plug it into my chart, and then use that to kind of gauge whether or not the spread is widening or declining during the day. So I've got a zero line here. This is when I entered that ratio, and the zero line is right about here, someplace around there, close enough. And so I create that zero line to see if for the day, is it going up, or is it going down, or is it actually going negative, or is it going positive, or whatever it is. So I'll take this ratio and just plug it in at the beginning of the day. This script also, excuse me, with all the moisture and the rain we've had, I'm just like, allergies are killing me. But anyway, it has nothing to do with what's entered in here. The script is here, and there is no price, so I'm not using a price graph. I'm only using the script for the ratios. And so I take that ratio and I plug it in here for my charts at the beginning of the trading day. That script will also be included with all of the other scripts when Market Timer releases it. But I think you can actually, it's not strictly a Market Timer script. It's I think they got it from Thinkorswim. So if you look up a ratio script on in TD Ameritrade on their website, you might be able to find it. And then we just use it for the YMNQ. Yeah, you can stay with the value you have. It doesn't matter. Excuse me. The only reason I use it, like I said, is to see, at the start of trading, is the spread wider or less. And what you could also do is you could just draw a line right at the open here, and then you could use that line as well. But the number here, the ratio, actually, it doesn't matter whatsoever. We've tried it with putting in fake ratios, and it still moved perfectly with the YMNQ. But over time, you notice that it changes. So it was like 3.38 when it was down here at the bottom. Now it's 3.42 because it's gone higher. On a longer term chart, you might want to use the actual ratio, the current ratio. The other way to do that, you can actually easily you can calculate the ratio yourself. All you need is a calculator. Right now, the YM is at 25,536, and you just divide it, and that's all it is, by 74.34. And so it's 3.435. So you could do it yourself at the beginning of the day too. You're welcome. So, really interesting. So, in the video that I uploaded this morning with Assure, one of the things that I noted was that when the market is going up like this and I don't see institutional buying on the supply and demand typically comes in very large numbers. So it comes in 150, 75, 100, 200. But this has been rather steady at like 2.4, 3.8, 4.6. It's been below 10, in other words. And typically what that is retail traders coming in chasing the price. And the one thing that you don't want to do is chase the price with retail traders because they're typically wrong. So you want to wait for an institutional buyer to come in, and the way you see that is a really large number here. If it's plus 100 and then it's plus 124 and then it's plus 150 and then it's plus 200, you know that institutional buyers are coming in and it's going to be a pretty good push up in the market. If you see a negative 500,000, whatever it is, then institutions are starting to sell. I don't see much of that today. We saw some of it yesterday. If you look at like this right here, there was a plus 104 yesterday, right around 150. Let's see, what is it? At 1350, which is right about here. So on this white candlestick or a bar chart here, a white cross, it was at 100. The supply and demand was at 104, and then the market just absolutely took off. So that is institutional buying right there. And you want to be behind, you want to be with the guys that are the institutions. You don't want to be with the retail traders. And so we haven't seen any institutional buying coming into the market yet today. So I would definitely not be buying this market. I have not made a trade yet, and the reason for that is I knew that this is kind of a little bit overextended here on the YMNQ pair. I knew there was going to be some sort of a pullback here in the ratio, but you know, we've got the arbitrage script is still pointing up. So I'm just kind of hesitant here to go short that pair. We're also above the momentum line, the standard deviation momentum line there. Yeah, almost every single day, Bob. Absolutely. Today's an unusual day because the spread is so wide, but typically, yes, absolutely. Oh, my allergies. So this is my typical setup, and you can't see this, but on my laptop I have my real account, but the only thing I have on my real account is this window. I don't have a chart. All I have is the buy and sell buttons. That's it on my real account set up on my laptop. And so what I do is on my desktop here, I put in my paper trading account. And then I use that for analysis so that I'm getting a very, very clean stream on my real account. Where'd you guys go? Oh, there you are. In John's video, the SD and ST, are they still in beta? Well, yes, they're still in beta, but my private clients are getting those scripts now, even though they're in beta, so that they can learn the system. So those guys are getting it, but I only have two. I only take on 2 clients a month, so there's only 2 people using it right now. But they should be actually. I talked to Jace this morning at Strong Market, and he said they're ready to release these scripts next week. So look for a release date, maybe midweek next week, either Tuesday or Wednesday. Yeah, he said they're ready to go. Yeah, the price is not going to be. It's not going to be included with your subscription, as I mentioned. But I'm going to get you guys the biggest discount I possibly can on them. Sure, no problem. Absolutely. Let's see. I'll take a look at these values. We had a huge, big, well, it's pretty big, I guess, on the NASDAQ. A plus 79 on the supply-demand index on the NASDAQ. Pretty big. That's pretty big. There's some institutions are coming in and buying. I'm not sure if that's big enough, though, to move the market. Typically, I like to see about 100 on that, but we'll see. The tires? Well, thanks, Eucharist. I appreciate the. I appreciate that. Actually, I have a friend who took it over and got the tires for me yesterday. Those and they're hard to find. Yes, I know. I don't expect you to ship me a couple of tires, Eucharist. No, absolutely. So, but the tires on my car are really hard to find. They were 265/40 R20s, and if you know anything about tires, those are really big tires, and they're extremely hard to find. Very hard to find. And so I went to the dealer first, and they couldn't even find any. And then Mavis Tire, which is a local tire shop here, was able to order 2 of them. And so I had to match the other 2 tires I had. So the 2 in the front are original to the car, and the car has 29,000 miles on it, so they were pretty worn down. And one of them was flat. So he got them. I ordered them Tuesday. They came in Wednesday, and my friend took it down yesterday afternoon and had him put it on. So here's one of the reasons, here we go. So one of the reasons why you don't chase retail with the supply and demand numbers, like we're starting to decline pretty fast already. There's absolutely no support by the institutions here. So we're already down from the high about 40 points or so. My car is an Audi A8L diesel. Turbo. It's just a couple years old now. It's a nice car. I like it. It's got the 20-inch tires on it, which I shouldn't have gotten. I should have stuck with a 19-inch because they're better in the snow, and I'm in the Northeast. So 20 inches, but I've never had, I mean, it's a Quattro, so I've never had problems getting in and out of snow situations, that's for sure. My market timer Excel chart does not show any data lines for a period during pre-post market. That's right. So here's the market timer Excel script. Because it's measuring internal market data from Thinkorswim, the internal market data, like the up and down volume and the advanced declines, that's all that this is measuring. And so they don't become available until the market opens at 9:30, and then it shuts off right at 4 o'clock. So, for example, what I do here on my chart, so you can see it's continuous. What I do is I go into the settings, and I go to the price, let's see, general, where am I here? Oh, I go into the equity settings. So for example, you can actually put anything you want into the script. I just remind myself that, you know, I'm trading the YMNQ most of the time. But if you go into the futures tab, what you want to do is uncheck show extended hours trading session, and then check the start aggregations at market open. And so when you do that, you'll have continuous lines for the Excel script. If you uncheck that, so in other words, if you have the DIA up here or you have something else entered into the symbol box, you're going to get a different result. So you're going to have to do equities instead of futures. But on the futures, if you show the trading session and hit apply, and now what's going to happen is you're going to have all of these gaps in here because there is no internal market data after hours or before the market starts. So in order to get a smooth continuous line, you have to uncheck the show extended trading hours and check start aggregations at market open. And then you get a nice set of continuous lines there. Excuse me, I am so sorry guys, my allergies are killing me here. Although the sun did come out, so that's good news here. Very good news. So hopefully that was helpful, Alex. And this is being recorded, so you'll be able to go back and take a look at those settings in your system. Yep, no problem. So we've still got a huge spread here. It doesn't look like any institutional buying is coming in. We're starting to, the strength is starting to dissipate here on the the YM, and the NASDAQ is actually starting to increase in strength. Let's see what it's doing. We had a huge, okay, so we had 79 on the supply demand here at about 1010, and now we're getting a huge negative. Well, it doesn't look that big. Yeah, it's not that big. It's down 19, so it's not that big. So nothing huge going on here. I'm going to move you guys to this side. I think that, you know, the market is going to digest this. You know, at one point, Facebook was down 25%. What's it doing now? I don't want to open up another window. So let's take a look here. I'll use my phone because I don't want to mess up my windows. Yeah, it's still down 18.9%. So it's not bouncing yet. Oh, and by the way, somebody else asked me in the, I think they asked, they didn't ask me, but Strong Market, Jill at Support at Strong Market sent me an email from somebody who asked if the Market Timer XL does not work on a mobile phone. You can put it on the mobile phone, but the lines are not showing up. And the reason for that, they've been working with Thinkorswim, and it's too data intensive to work on the mobile phone. So I guess if we ever get, if we ever get 5G, then maybe it'll work on a mobile phone. But right now, it's too data. Almost all of these scripts will not work on a mobile phone, and only works on a desktop. And the reason for that is that they are data intensive. Just FYI. So it looks like we still have retail buyers coming in and buying up this market. They love to buy those dips. Strength is starting, it's not turning up though, it's continuously in a downtrend here. Looks like the NASDAQ is starting to turn down as well, on the strength index at least. Not even on a good laptop. Depends on your internet connection, I suppose. It works fine on my laptop. I have Spectrum Communications, and Keith, I think you're in Pennsylvania. Do you use Spectrum? Do you have Spectrum down there, or who's your internet provider? It used to be Time Warner Cable, and then they sold to Spectrum. Oh, you're in Michigan. Sorry, I thought you were another Keith. Comcast. Yeah. I have yeah, we just got 400, so I'm at 400 now. And it's a lot better. But I've got 3 devices. I've got 4 devices going on. So I've got my desktop, I've got my laptop, I've got my iPad, and I've got my phone all on at the same time. And the data seems pretty clean and good, and I haven't had any hesitation at all. In fact, I should turn off my iPad. I really don't need that on. But we just got 400, and when it comes, you're going to like it. So I don't know if you have 400 in Michigan or not on Comcast. My house down in Washington, I have a place down in Washington, D.C. I'm with Comcast. I hate them. I really don't like them. I like Spectrum a lot better. Anyway, yeah, I got 400 on my phone, 443 on my phone. All right, let's see what we got going here. YM is still kind of just moving sideways, not doing much. Test is after you're off and not running. Yeah, maybe Uber Conference is eating it up or something. I don't know. I always get messed up on my Thinkorswim platform when I'm running Uber Conference in the platform at the same time. That's why I don't put my live trading account on here and I use it on my laptop instead. So we've got a minus 45 here on minus 41, minus 45, minus 46, minus 53 on the supply demand on the NASDAQ here. Minus 108, minus 118, minus 123. So yeah, there's some institutional selling, and then a 284, plus 83. So those are offsetting transactions. So if you just saw that on the NASDAQ supply demand index, we had a large negative numbers, then we had large positive numbers, which are basically offsetting transactions. But those large numbers are institutional buy and sell orders. So we may not get a bump out of that, although there was more to the buy side than there was on the downside. I think the biggest negative was like 124 minus, then it was a plus 283. So it might indicate a little bit of a bump higher. Now it's a plus 16. It looks like retail traders are starting to come in. But those hundreds and 200s, those are all institutional trades. We are seeing a little bit more strength in the NASDAQ here. So it's just one. It's really it's not a particularly good trading day. I'm hoping I can get at least one trade in today. The other on the video I uploaded this morning, when you guys check that out, I also mentioned something really important. There were 2 time periods during the day that the YMNQ trend happens, and that's at 9:30 in the morning, between 9:30 and 10, and the other time period is at 3:30. So if you take a look at this time period here from yesterday, it was right at 3 o'clock that it started to change direction. It was in a downtrend for most of the day, then right around 3 o'clock it started going higher, and that's actually true for most days. So let's take a look at this time period. This time period is 9:30, 10 o'clock. So the after night session was going higher, and then as soon as the market opened right here at 10 o'clock, it went down. So look at those 9:30 and 3:30 Eastern time periods and be alert for the possibility of a change in trend. So here's the overnight, and then right at 9:30, 10 o'clock, when the market opened, it changed direction. And if you know that those time periods are important, you'll keep an eye out for those and take the opposite side if the setup is correct. It's a really good kind of a tell for the YMNQ trade. Is anybody doing any trading today at all? Alex, what do you typically trade? Do you do futures or options, or what do you do? Observing is a good idea today, though. That's exactly what I'm doing. Okay. Futures and options. On a day like today, I'm very tempted to do gamma scalping on the diamonds, selling some calls. Okay, let's take a look at those. What to collect garbage? There we go. Yeah, so we've got the 1 day to expiration here at the money, or just out of the money is the 256, which is the one I'd probably pick. The 255s are about 40 cents in the money. We could probably sell these. See if I can get them at 50 cents on this practice account. Let's see how these would work out today. My timing is probably horrible, but we'll see. I mean, the strength of this move isn't real good, so we're kind of up towards the top here. Let's see what the yeah, so we've got, actually, on the Market Timer XL, we've got a lot of volume going into just a few stocks here. So that gray line is the volume line, but the number of advancing issues is declining sharply. Yeah, we've had some really weird readings here in the XL script. We had this huge separation here on Tuesday. We had a 100-point decline in the YM futures early on Wednesday morning. And now we're getting this kind of a very strange, looks like a lot of volume is going into just a few stocks. Interesting. So let's take a look and see what that theta is. Theta is 725 on 50 contracts. Delta is minus 1850. We should be able to get 20 cents out of that, I'm thinking, at least. Maybe 20 cents by the end of the day. Why selling calls if the MT study advanced issues is over 50%? That's a good question. It's not well formed. I mean, there's a huge separation here between the volume and the number of advancing issues. What I found was that, I mean, it's not always the case, but typically this volume line here is measuring kind of an over-exuberance of people who are trying to buy a dip of some sort, and so they're buying the market, but really there's a lot of suppression of the advancing issues. The advancing issues should be up here with the volume, but it's not. And so you got a lot of, that just reminds me of retail traders coming in and just kind of trying to, buying the dip here, and it may not last. But that's a good question. That is a good question. Yeah, I would definitely question that as well. I think that there's just, I mean, it's not a good formation. So in other words, if these two lines were actually right together, then that's a good solid move, and I would not short the calls. But if these are separated in any way, either the volume line was too low or it's too high, then it's just kind of a mixed move, and you know, I would take an opportunity to look at that. Plus, you've got the strength indication down. It started out pretty good early this morning, and it's just continued to decline throughout the day here. And also, the supply-demand index, there's no institutional buying coming in at all, which means that only retail traders are actually coming in and buying the market. And typically, that means that the market's either going to stay where it is most of the day, but it's not going to have a big push higher. So if I'm slightly out of the money on these, if I'm slightly out of the money at 256, that means the diamonds would have to go up another 56 cents. And I just don't see that happening right now, at least with everything else that's going on. You track the gamma scalping on the 1 hour chart on the MT study. Yeah. I like the 1 hour chart. Yeah. There's just too much noise in the lower time frame. So if I go down to 50, if I was gamma scalping, or if I was scalping the YM futures or the ES futures or something like that, then maybe I would take a look at the 15-minute or 5-minute chart. But for gamma scalping, the 1 hour is good. So this supply and demand seems to be pretty steady here. It's just kind of rolling along. There's no, if I see in the supply and demand a big number like 100, 200, then that means we're probably going to have a real sharp push up in the YM and in the diamonds. So I'll get out of my scalping position. But it looks pretty steady at this point. Yeah, I mean the market just the NQs just went down and they're just basically staying down right now. YM closed, opened up and they're just staying there. So according to CNBC, Facebook is on pace for its worst day ever. Typically when a stock or an ETF or something like that gets hit on a big day like that, 20%, there's something else behind that move. It's not just a bad earnings announcement, or it's just not a bad number in their spreadsheet someplace, in their income statement. It's something else. So, it's not the time to be like buying the dip on a day in which a stock or ETF is down 20%, because there's a lot more to it than that. I bought the SPX call 2840 on August 6th for $16.30 and sold it for $18.10 for $180 on one contract for 15-minute trade duration. This was based on the 15-minute market timer study. Okay, good. Good. I mean, if you work in that time frame, then stick to that time frame if it works for you. The 1 hour works for me and for most of my trades. I do go to the 5-minute and 15-minute. I go to the 5-minute, especially for the scalping, to be sure. So we're getting a little bit of a decline here, not much, still kind of sideways, and we're up about 150 bucks. In older HL high-level mentoring sessions, I believe I saw that you sometimes hold NRT trade for a couple of days if appropriate. Do you still hold that, or only for a very short time? Since these scripts were created and I started using these with market timer studies based on the strength index on the market timer spreadsheet and the supply demand index on the spreadsheets, I'm taking shorter term trades but they have a much higher probability. So I'm doing more contracts. So I'm not doing just one contract. If I was going to hold it for 1 or 2 days, which is still a possibility, especially now that I think that the spread is probably going to widen and go higher. So the YM is going to outperform the NASDAQ here for probably maybe the next several weeks. I might hold one longer than 3-4 hours, but the way I used to take longer term trades was to buy the options. So I'd buy the diamond calls and I'd buy the Q puts if I was looking at a longer term trade to the upside. The other thing I wanted to tell you guys about was the fact that, do you guys know about Collective 2, the social trading site? Have you guys ever heard of it? Yeah, so Collective 2, they're kind of in the beginning of July. I haven't really paid. The only thing I've really done is the arbitrage script. So let me go over there. Yeah, Collective 2 is a social trading site, and basically what they do is they have different traders that have different strategies that they can put on the site. And so I joined and I started trading the market arbitrage script on it, along with a couple of others. And so if you take a look, this is so what I did was, when I did a trade on the YMNQ, and I call it market timer arbitrage. And so I set up an account as market timer, and so far I'm up 18.5%, and I just started it Sunday, July 8th, my first trade. Yeah, that was my first trade too. So it's from July 8th to today, which is what, the 26th. I'm up 18.5% with just a 5.4% drawdown. Now they have statistics and stuff like that. These are all my trades for. So what I did was, whenever I entered a trade in my account, I duplicated it here on Collective 2, and so you can see that I'm buying I was long the YM yesterday, short the NQ, and I caught that big move up when Facebook fell down, which is right here. And then these are all my trades going back to. I don't know if there was anything before this. No, that was it. So I started my first trade on July 9th. And so each one of these is a pair. So I've got the YMNQ. I was up 527, lost 158 on the diamond. So it was a net, whatever, 350. This trade on the 10th was a winner on both sides. This one was, let's see, I entered this on the 10th. I did 2 contracts. So I was long, I'm not sure what I did here. I gotta take a look at the timestamp. Yeah, so I was long the NASDAQ, short the Dow, the diamond, or the YM, and I lost 136 bucks on that, and then I reversed it, and I went long. Yeah, I went long the Dow and short the NASDAQ, and that worked out perfectly because I saw the signal turn around. So that one made about 460 bucks. Then this one was a pair. I made money. This one was a pair. I made a little bit of money. This one was a pair. I made about 450. This one was a pair. These two here. And some of these I kept overnight. So this one was July 12th, and I kept it until the next day on the 13th and got out. This one was on the 16th, and you can look at the timestamp. They're like a minute apart. The Collective 2 platform isn't that great. because I have to open up 2 different windows to enter the trades. Alex, yes, it does have a copy trade function. If you go up here, you can either simulate it or you can subscribe. I put $35 a month in there if you want to subscribe to it. A lot of these guys are charging like hundreds of dollars. But you can either subscribe and then you can do auto trade. They do have an auto trade. But this is really just, I'm just kind of playing around with the Collective 2. I'm not that familiar with the platform. I just started entering the trades in. So overall, 18.5%, 5.4% drawdown, which is really, really low. If you take a look at the statistics, they have nice statistics as well. In fact, what you can do is you can go to the website and take a look at this. I'll put this in the chat box window. I suggest a minimum capital of about 30,000, but really 25,000 is fine because you're basically, some of these trades you're only going to be in it for a few hours. The average trade duration is 11 hours, Dan. So I guess I do hold them. Sometimes I hold them overnight, but I'm not going to hold them for really long times, but that's the average trade duration. Win to loss is 3.1 to 1. Correlation to the S&P. So they have some nice statistics. Annual return with trading costs is 1,400%. But I mean, typically my annual returns are about 120%. So I mean, you got to take that with a grain of salt. Although now, because this new system here, this new system with the market timer scripts, with the supply and demand, the ST, I mean, this is all brand new. I mean, I only started using this since the beginning of July when I started this Collective 2, so just to record my trades. And so hey, if I can get a 1,400% annual return this year, that would be awesome. But I think that this 18.5% monthly return is probably pretty realistic as long as the market is cooperating and the trades are good. So that's what, 18.5 times 12, whatever that is. That's big. Yeah, that's 200%. So if I can go from 120% to 200% on my account, I'm really happy. Very, very happy. Anyway, I think Collective 2 has an interesting setup. I'm still kind of getting used to their platform. I wish it was a little more automated for entering trades, because basically what I have to do to enter a trade, especially on my arbitrage trade, I have to open this window, then I have to go over here and open up another window. And then I have to enter the trade on 2 different windows to enter, and that's why when you look at the timestamp on the trades, they're like a minute apart because I have to navigate those 2 windows. Yes, you can. Do they have free accounts just for tracking our own trades? Yes, they do. You can do a simulated account, and so you get basically you can simulate what I'm doing and just kind of track it. That's slightly better than 6%. What's slightly better than 6%? So if I can do 18% a month times 12, yeah, it's closer. Well, it's about 200%, 216%. Yeah, it's. Yeah, so this, 1,300% or whatever it is, I mean, that's crazy. That's, I mean, 10 to 12% is typical for me, but 18% is almost double that. So that is actually, using these scripts has helped tremendously. I mean, you have a much better grasp of what's actually happening in the market. I mean, you can just take a look at the strength indicators on both the Dow and the NASDAQ just to get an idea of which one's stronger here. You know, the Dow's starting to turn down a little bit. The NASDAQ is starting to turn up a little bit. You know, and the Dow is flat, NASDAQ's up. And the arbitrage strip. The arbitrage strip alone is worth its weight in gold. You just follow the lines. So when you're off here, make sure you check out that video I did with Ashore. He sent me his recording of his trades. Now, I don't want him commenting on his trades. I want to see what he does, not what he says. So he sends me a voiceless recording so that I can provide, so I can see what he's doing. So I see what he sees, and then I have to say, okay, look, you're like on the wrong track here. And he was on the wrong track, I think, early in the morning yesterday when he recorded it, because he started to trade short here, which was the right thing to do, especially with all of the indicators pointing down. But then he got nervous and he thought it was going to go against him a couple of times. He got out of his position, and then, of course, it continued in the right direction. And then he got out again, and it continued in the right direction. He even took 2 long positions in here, which I scolded him for. and then he finally got on the right side of the trade again, finished the day down, and he went negative a little bit during the day, but then he went positive at the end of the day. Then he took this long position right here, which I told him was absolutely the right thing to do with all of the indications that we had, and he caught that, which was great. But this makes the scripts just make it so much easier to be able to do the YMNQ trade. And so, boy, if I can do 180, 200% this year, I'm going to be super happy. The team from Strong Market is not working on new scripts or better scripts. I think they're pretty happy with the scripts that we have, especially for the supply-demand, the strength indicators, the Market Timer XL. So the scripts are probably not, there's probably not going to be any new scripts, but they're going to continue to innovate on the scripts that we have. The scripts that we have, though, are just world-class. I mean, they're just really, really good stuff. So I don't think they're going to be doing anything as far as a new script goes, but it's possible. I mean, they've got 2 people who are working on nothing but new algorithms, back testing, looking at new relationships, machine learning. There's also, I don't know if you guys saw this site or not. Have you guys heard of Quantopian? Yeah, Quantopian is like really, really cool. So what we're doing now is trying to get into more of a machine learning stage with the scripts. Let's see if there's going to be like a, oh, here we go. So what Quantopian does is it programs in Python in their own environment, and then basically you can use all of their data, and then you can compete against other traders to win 5,000 in prizes each month. But the real perk of this Quantopian is the fact that you get to keep your intellectual property, and they will fund your scripts. So basically, you create an algorithm, investment algorithm. You only keep 10% of the net profit, though. However, they will put allocate approximately $5 million per algorithm to your successful test, and eventually you could go up to $50 million on a single algorithm. So they'll put capital into your algorithms in order to trade them.
You only get 10% net profit on those, but you don't have to put up any money either. Yeah, it's pretty cool. So they're working on creating the problem is, of course, is that you have to create a totally automated system. So even though we have the market timer has the swing algorithm signals, a lot of what we're doing here is reading these different signals, and there's some discretion in how you're going to take these trades. And so that's why, and also you're talking about, holy cow. See, a lot of these scripts are data intensive. That's why we say, that's why you can only use them on a desktop. But to totally automate this entire system is going to take some work. But it's pretty cool. I mean, if I can get 18% a month on $5 million in trading capital that they're going to provide to me, what's that? It's like $1 million a month. No, it'd be $500,000 a month. Yeah, I mean, well, 20%. Let me do 20%. So if it's $5 million and I can generate 18%, that's 900,000 times 10% of that would be 90,000 a month. Now it'd be 90,000 a month, but and that would be close to $1 million a year. Yeah. If I can continue to do 18% a month, absolutely. And I wouldn't have to do anything. So I write the script one time, let them run it. You know, that'd be pretty sweet. Yeah. All right, let's see how we're doing. It's going against us, so we're probably down a little bit. Yeah, we're down 350. On 50 contracts, and we're starting to see some more strength come into the. I've been talking to you guys. I haven't been paying attention to the market here. Let's see what we got going. So we got the YMNQ. Looks like we had a little bit of a pullback on that. The momentum is still higher. We've got a little bit of a downturn in the pit filter. We've got one of the three lines in the arbitrage script starting to move lower. A little more strength coming into the diamonds here. We'll see if that lasts. I haven't been checking to see if any institutional buyers are coming in, but this looks pretty. The trend looks pretty steady here. And the NASDAQ is also starting to turn up just a little bit, and it's also in positive territory now. And we're only down 37 points, so the spread is a little bit declining just a little bit, but yeah, it looks like we're getting a little bit of strength here in the diamonds. So anyway, let's see what the yeah. So those lines are starting to come together, so we're getting some strength in there. So I'm just going to exit this then. It's at 275. It's still not bad. It's out of the money just slightly. That theta should be working for me. But anyway, I'm down just 320. I may hang in there just a little bit longer because the supply-demand index here is only showing me retail buyers coming in to push this market higher. Like I said, unless I see institutional buying coming in, we're probably not going to get a huge bump up from this point, but we'll see. All right, guys, it's been an hour. I appreciate you very, very much coming on with me today. I'll see you again hopefully next Tuesday, and hope you guys have a great weekend, and I'll see you then. All right, Bob, Dan, take care, guys. Keith, no problem. Appreciate you guys being here, and Alex, no problem. Have a great day. I'll get this recording up this afternoon, and you guys can review it again if you want. But do take a look at that video I recorded with the private client Assure this morning. That I think you'll get a lot out of that. All right, Eucharist, have a great weekend. See you guys. Bye.